Well, I haven't had the chance to meet with you, Carol, in person and sit down and chat, although I've been basically listening to you in ADIPEC, for example, last year and a few other times. But I have met and see some of your staff or trainees, and specifically Valentina and
Yeah.
Sarah Raful are two good friends of mine.
Oh, that's very nice. But I'll
A
be in
couple of
at
others.
ADIPEC, so we should definitely meet this time.
Yeah, I will be in ADIPEC. I probably will be on. I will be back on that same stage that you were last year on the ADNOC trading thing. But
Okay.
yeah, let's please go then. I'll get in touch outside this to make
Okay,
sure.
everyone, we are going live. Thank you.
Hello, good morning, everybody.
We can't see Sean. There is a dark patch on his face.
No, there is a gremlin on my telephone or on my desktop, so I'm not quite sure what that is. I might just go to, off camera so as not to freak everybody out. Good morning and welcome to the Daily Energy Markets podcast. It is July 10th. We do have Brent crude oil a little bit off its $85 kind of sweet spot, trading down over 0.5% in trade this morning in Asia at $84.10. WTI still holding above $80 at $80.94. So all in all, sitting sort of smack on that a year-to-date average for Brent, 84 plus some change and little movement, but wiggle room here and there. Dr. Carol Nachley, Chief Executive Officer of Crystal Energy. Great to have you back on the stage here, Dr. Carol. I wanted to get your thoughts in the aftermath of Jay Powell's comments yesterday. Did he give anything for the energy markets, for the commodity markets to sort of take off with, that we are now moving into an easing cycle, that the conditions are there for the Fed to finally follow some of its other peers like the ECB?
Good morning, Sean. Good morning, everyone. Definitely Jay Powell's comments yesterday, although they were not crystal clear in terms of forthcoming interest rate cuts, because he clearly said that they want to be more confident before taking any steps that can be too much or too little or can destabilize the current situation. But the message that he conveyed kind of was taken as if cuts are coming sooner rather than later, but probably either in September or towards the end of the year. So his comments sent positive vibes to those who are expecting interest rate cuts, because remember at the beginning of the year, people expected those cuts to happen much earlier towards the spring or at the latest in May, but this did not happen. And we can see that now we can be better prepared perhaps for those cuts to take place in the coming months towards the end of the year, because the labor market is not heating like as it used to over the last 2 years. Inflation, I mean, the inflation rate has come drastically from more than 7% to closer to the Federal Reserve target of 2% in 2 years. So that's a major progress. And I think we are getting closer to seeing those cuts, and we can expect them when. It's a question of time. And Jay Powell did not want to give us a definite date, but definitely he gave a positive signal that those cuts are coming towards the end of the year.
Dr. Iman Nasri, Managing Director, Middle East at FGE Dubai. Dr. Iman, as the oil traders and market actors as a whole pack their towels and swimming togs and start heading towards the beach, what should they keep the closest eye on, do you think? I mean, is it the rate cuts that Jay Powell is just about maybe going to pull the lever on? Is it OPEC plus cuts or not? Are they going to go ahead? What do you think is going to be the sort of direction of influence, the direction of travel of the oil markets going into the kind of weird holiday season?
I think the rate cuts are going to be as important as it has been over the past year or so, that the market has been watching and expecting to see the ease, but it has kind of lost its significance in the very short-term impact on oil price or the sentiment. As I said, the market will continue to watch and take that into consideration. But I would say that in a very near short term, what the market continues to watch in its holiday season is probably right now the hurricanes and how it evolves and the impact on the operational side, both upstream and downstream, and any signals from demand as we move forward. I think supply has, for now at least, for during the third quarter, is a bit more clear for the OPEC Plus right now. The demand situation, as we all wait to see when OPEC is going to adjust its own forecast according to the realities that have turned out in the first half this year, to adjust it down. So to me, the two factors that beyond the ongoing geopolitics, which is basically the two events in this part of the world, the Houthis kind of distortion to the market, to the shipping and freight, as well as the Israel-Hamas situation. Beyond that, which is running in the background, I think any indicators regarding demand for the second half of this year and in the immediate short term, hurricane developments is going to remain the must-watch kind of items for the traders.
Ram Narayanan, Director VP Strategic Market and Business Development for Vedanta. Just as well we have you on because you're in Asia, you are the incremental demand growth guy, or you can at least have a window on it in Asia as we try to read the tea leaves here in the Middle East. How healthy is China or not? How vibrant is India or not coming out of its election? Where is demand, do you think, going? The first half, a little bit tepid in Asia. The second half needs to be bumper in order to meet some of those demand growth forecasts from the IEA, never mind OPEC's.
Yeah, sure. That's right, Sean. I think taking the cue from what Dr. Nasseri said, demand is going to be the main driver for the way the oil prices are going to move. I won't worry too much about the supply right now. Let's look at India. India, we're coming out of the elections. We had a sort of a tepid second quarter, but now the government is in place. Despite a reduced majority, the plans remain the same. The budget is going to be announced on the 23rd of July. So we don't see much of a directional change from what the government had done earlier, practically the same government. So India's demand should remain healthy as what we see right now. Mainly because the focus on infrastructure is going to be there. B, we are in the midst of the monsoons right now. A healthy monsoons will mean a good rural demand. And that is, and see that, in a couple of months, we'll start the festive season also. So looking at all these factors, I expect the Indian demand to be pretty strong. In fact, when I look at the numbers which has come in, oil import numbers, especially for May and June, despite there's been a slight bit of a drop, but I won't worry about it too much. So the Indian demand was close to slightly more than 5 million barrels per day. That is bound to stay. So that is from India's perspective. I would worry a little bit more about China because the news that's come out of China over the last 1 month, especially look at the PMI for manufacturing, the consumer reports that we saw today morning, and see this weakness that still persists in the property market. So at the starting of the year, we saw an oil demand growth rate of various other people going at around close to 2 million barrels per day. Now it's come to 1.5, 1.6. An OPEC report is bound to be out today evening. I would worry a little bit more about the oil demand in China. When I look at the refinery operating rates, they are lower than what it was in the past also. And gasoline demand is weak, diesel demand is weak, and aviation turbine fuel demand is strong. So therefore, looking at the demand number that comes out of China, that is what would worry me a bit, and that will be a bit of concern from a oil producers' perspective. Otherwise, I see the demand in the rest of the nations really holding up. But China is going to be the one that's going to give the direction to the demand numbers for the second half of this year.
Dr. Carroll, I wanted to get your thoughts on, as mentioned there, that OPEC comes out with its monthly report today. We're deep into July now. OPEC still holding on to that 2+ billion barrel a day demand growth forecast for 2024. IEA publishes their monthly report tomorrow. Do you expect, or what is your expectation? We still have this wide gap, OPEC holding tightly to this forecast. Do you expect to see some sort of a merger between these two numbers over today and tomorrow, or are we going to still see this polar opposite outlook?
Sean, so historically, yes, you would see divergences between different forecasts for demand, because one thing we have to be clear about is that despite our the improvement in our understanding of what drives demand, it still remains much more difficult to forecast than supply. So that is something that has been around for years and decades, and it's not going to change anytime soon, because demand is driven by various drivers and determinants, while we have a better understanding of those determinants from the economy to all sorts of things in relation to price, to income, substitution, etc. It's very difficult to forecast all those determinants. So we should expect to see continuous divergences. And I'm not aware of really various agencies ever saying the same thing exactly about demand forecast. However, for this year,
we're
yes,
in the middle of July. I mean, it's one thing to make that case in January, but the middle of July, I mean, we're trading, and deliveries nearly into the fourth quarter at this stage.
Yeah, and we'll have to wait until the end of the year, and perhaps January 2025, to see who was right. But I think OPEC has been the most bullish among all forecasting agencies. And I think for me, they are overly optimistic. We are seeing the Energy Information Administration revising its demand forecast upward, but it's not a million barrels upward revision. They revised by maybe 100 or maximum 200,000 barrels a day. So we might see this kind of gap narrowing, but I don't think it's going to be equalized. And we have to wait until next year to see who was right. But I think maybe the IEA is too pessimistic and OPEC is too optimistic, and the agreement has to be somewhere in the middle. But at the moment, we are unable to see that because of all the demand uncertainties related to China, related to other countries as well. But I wouldn't see a sudden revision of 1 million being added or removed within 1 month of forecast revisions.
Dr. Mann, I wanted to get your thoughts on the sort of supply outlook for beyond OPEC Plus. Clearly, they have their parameters, they have their agreements, but we've got, most notably, Iran's oil production looking to reach as high as 4 million barrels a day. Their exports are near 5-year record levels. Where do you see the non-OPEC Plus countries adding additional supply? US looks sort of essentially flat. Your thoughts?
Before addressing the supply, just a quick comment on what Dr. Kao mentioned. I fully agree with what she said. I think our forecast basically also suggests that we're seeing at about 1.5 million barrels per day of growth in 2024. 1.1 million barrels per day we have seen, or we have estimated and counted in first half, and we're expecting 1.86 for the second half. But to get to 2.2 million, we need a massive, huge growth second half, if our first half estimates, based on many actual and proxy estimates, to be held through. So I think we will end up with something in between. But how OPEC is going to handle this situation, I also agree that they're not going to over 1 month adjust down 1 million barrels per day of the demand or less. I think that they may hold on to that until maybe end of the year, or a slight revision of historical next year for 2024. But in terms of supply, part of the problem that will emerge, or issues that we see for 2025 this year, I think we're fine in terms of supply out of OPEC. It keeps the market in a balanced to short, but seasonally we expect the draws in third quarter and less so in fourth Q. So we're okay this year as we look at the.
Okay, I mean, ultimately we are seeing inventory draws, very big one last week in the US. I mean, it does matter where these incremental supply come from, if indeed the draws are to happen or not through the third quarter. They seem to be happening. How big will they be through the third and fourth quarter will have a big determination on the direction of price.
That is correct, and I agree that we had larger than expected draws, or seasonally, basically, as the market expected June to start into an inventory draw. We had a bigger draw in June, and we expect July to continue to be bigger, but still within range and within the trend. Overall, third quarter is going to be shorter, and 4Q versus last year is going to be also slightly shorter, the market. But this is all in preparation for a significant length in the market in first quarter next year. As you mentioned, there are some non-OPEC plus suppliers which have had healthier and better growth in supply. Iran is one of those, as well as US. I think our forecast for the US production has been more bullish than other forecasters out there, including the EIA and IEA, and we continue to be more optimistic, which reflects on our call on OPEC. Similarly with Iran, numbers are 3.2, 3.3, 3.4. Our estimate is that they are slightly above 3.5 million barrels per day production of crude at the moment. And the 4 million that you mentioned, which is the Iranian officials' wishful thinking or target, is at reach only if basically there are developments post the election, that the surprise election that we had, and potential kind of unlocking into negotiations that they have had, or resuming that, which I don't expect it to happen before the US election, to be honest with you. That's not the best thing on the current candidates' books, to start a negotiation with Iran in light of many things that is happening with the Houthis in Yemen and Hezbollah and Hamas with Israel.
Ram, speaking there obviously to the supply side incremental tweaks that could determine the direction of travel through the course of the second half. Will Iran increase its exports? Will the US actually add new supply this year in a way that the first half they haven't? On the demand side, a lot depends on the Asia, obviously incremental demand growth being at home in Asia for the last 20 years. But the big question as to where it can go in the second half is around whether China chooses to stimulate or not. We saw in the West and in America in particular, massive stimulus coming out of the COVID period, less so in China, practically non-existent. Still the question mark, we've got a hesitant central bank in China. Is China likely to take a more bolder move to stimulus in the second half, in your opinion? And what might be the factors that guide it or help it decide what to do?
Yeah, in fact, just to give a perspective, the fiscal stimulus done by India during the COVID time was lesser than China, but still then we've seen the results. But anyway, now see, here's my view about China. I worked in China, so we've been following China in various commodities for the last 25 years. Right now, even if they announce a fiscal stimulus, in fact, their session is there next week, where would the money go to? They've put enough money in the property market and infrastructure market. These are the hard markets, like, which will stimulate the demand for commodities, especially oil. B, the transportation sector. Even if they put a stimulus out there, how would it stimulate the demand for oil? I don't see it happening. The sector which is growing a lot in China is the one which is focused on energy transition. So therefore, mainly the solar panels sector, and second thing is electric vehicle sector. Now there we've seen a big boom in demand, so which has led to demand for commodities like steel, aluminum, and copper, the business which I work in. But we have to see the fact, like the domestic consumption of these particular items is not going to go up in a big way in the second half. That is number one. Exports, which has been a major factor for them, that is facing a lot of issues. Now we've seen tariffs being announced in Europe, tariffs being announced by USA, and all the things. And if at all, looking at the outcome of the US elections, things can go the other way also. So therefore, net is like we've been looking at all the numbers. The fiscal stimulus will have a limited upside from what we can see. And China's also on the fiscal.
Sorry, Ram, you're saying that even if they want to do it, it has limited impact. So it's not that they don't want to do it, it's just that they're identifying or assessing that it won't have the impact.
Sure, exactly. That's right. They also announced a fiscal deficit number starting on the budget, which they want to keep also. And Despite the fact today also we've seen that the bond yields have gone down, they're trying to stimulate the bond markets also. So it's all like trying to catch up. So I don't see any major demand stimulus coming up. So therefore, limited upside. That's what I would say.
Okay, let's go to the survey question, which is kind of underpinning my earlier comments. What do the traders, the oil market actors, need to keep closest eye on when everyone heads to the beach for the summer holidays? I've given 4 options here. There might be 40 other options, but nonetheless, these are the 4 that we pulled out this morning. Rate cuts, which of course we talked about this morning, and it was overnight with Jay Powell getting in front of Congress, and he'll be again in front of Congress today. Senate yesterday, House of Representatives today. Will he give any further insights? Biden goes or stays. This is the talk of the summer already. Will that does that matter for the oil markets? Should they keep an eye on it over the summer holidays? OPEC cuts or no? OPEC to meet on OPEC Plus to meet on August 1st to give the next strong signal as to their intention to carry on with the planned increases in October. Will that be a signal to keep an eye on? Doesn't matter. Or the hurricanes, as was mentioned on our discussion earlier. So what should the oil market keep its closest eye on? You choose which one of those you think has the biggest bearing for the direction of travel. I now want to just close our last commentary a little bit around geopolitics, which I didn't really include in our list there, but ultimately it has a potential bearing. My sense is at the moment there's a lot of noise, but not necessarily premium in the oil price like we had in the second quarter. Each of you are not geopolitical analysts, and I'll just set that up so I don't have, or the audience has massive expectations of in that space. But nonetheless, you all are very, very knowledgeable about certain places that are critical to this moment in time. So Dr. Carol, as a wonderful Lebanese lady and a great academic brain of the energy markets, Lebanon, of course, sadly, is at in the front and center of the current thoughts of escalation between Israel and Hezbollah. It wouldn't be the first time that Israel took an action during the summer months when the tourism industry is so important to Lebanon. But I wanted to get your thoughts. What does it look like for you as a close watcher of Lebanon, as a Lebanese person and an energy market analyst?
I see what's happening there, more business as usual, sadly. So if you are just living abroad and watching the situation, you would think that there is some serious escalation. But so, I mean, we have expected that. And I think if there was going to be an escalation, some serious one, more than what we are seeing today, we would have seen it already. I'm not excluding it, but I think to go back to the scale of war of 2005 or 2006, that is a bit unlikely, especially with change in leadership in Iran and ongoing changes all around the world. But I want to add the most important geopolitical factor for this year for me, and would have repercussions for many years to come, including the Middle East and elsewhere, is the US election. It's not about whether Biden stays or goes in the next few months. It is who's coming to power in the election in autumn, because that will have an impact on the Middle East, on Iran and Israel and Hamas. That will have an impact on the Ukraine war and Russia and what will happen next. And that will also have an impact on the relationship with China, because we know that Trump was pretty tough on China. So for me, if you want to take, so Lebanon and Israel, what they are doing today, Hezbollah and Israel, is a very small development in the bigger scheme of things. And I would say the elections in the US and the outcome of those elections will dictate the outcomes of all the geopolitical noises happening elsewhere.
Dr. Aman, of course, we had the big news this last week of the presidential election in Iran, your home country. The reformist president, surprisingly, in some regards, wins the election, sort of a Khatami figure from 20 odd years ago, but at that time that was seen as this massive new dawn, and the Iran was going to move in a whole new direction, and we know what happened over the last 20 years. But I wanted your thoughts at this time that this president comes to the fore in Iran. It's immediate. Will he get a honeymoon? Will he have a different direction of travel? Does he have the power for a different direction of travel? Your thoughts looking forward into the second half with the new Iranian president?
Well, I am finishing of a note I'm writing to our clients that says Iranian presidential election, a big shift in direction, but not a U-turn. That's the title. So that's the summary of what I'm going to tell you in a couple of minutes, that the Supreme Leader is the key driver of the big major policies in the region. None of the presidents in Iran have been a real full power president. They have had to play the cards on the basically the big orders that they receive. However, as you mentioned very correctly, the Pezeshkian election resembles Khatami's because of how the lineup of the candidates were done and the strong kind of endorsement and approval or signal that the Supreme Leader sent by showing his vote, his ballot at the election to everyone, that he's basically voting for him. After all the discussions that they had following the first round results was basically 45% for Pezeshkian and 55% for the other three candidates, which were all principalist and conservative. So despite the people's vote for them, and despite them saying that we're going to follow the Raisi, we're going to be tough on the US, we were fine, all of that, he basically said that, no, I want the change. I want the Pezeshkian's promises because I think he wants really to make some changes. The economy, the state of social satisfaction, the support of the regime and his basically rulership, everything is at its lowest. So he did want all of that to change. Now, also, as Carol rightly mentioned, the election results in the US has a big impact on this one, because he, despite all the wishes that the Supreme Leader may have, and Pezeshkian and his team, led by Zarif in the foreign policy, who did the JCPOA, I don't think it's easy to come to the negotiation table with Trump and win something without having a big exit out of Lebanon, Syria, Yemen in it, which is going to be still tough with the same Supreme Leader and as in the same major principles in place. So yes, we're going to see some changes in directions. There will be definitely ease in the domestic policies and pressure on the social situation, as well as a big wish and push towards opening relationship with the West, renegotiating the deal with the US and getting the sanctions lifted. But it really depends on what comes out of the.
I just wanted, Iman, quickly to follow up on the internal dynamics of Iran. Clearly the external, as you've articulated very well, paints that picture. But internally, this candidate coming forward at this time to be president, when we're at least closer to the window or the era of the end of Khamenei, does he have a role to play in that? Does he have a destination? Because the former president was seen as a candidate for the big job. Is he, or does he have an influence? How is the internal dynamic of him coming at this time?
I think this is part of the angle that this result was a surprise. Everyone expected, everyone thought, including us, that, well, the scene was set or being prepared for the next Supreme Leader, and it would have either been in the early years or when Raisi was selected, that maybe him or Khamenei's son. But then later, when Raisi was basically had that accident, many people thought that it wasn't an accident and were taught that this was preparing to bring someone into presidential seat to make the transition easier. Now, your question is valid. Is Pezeshkian an easier transition for the next Supreme Leader? In the face of it, not, but you could think that maybe in the back end, still he's easier for the Revolutionary Guard and the people who are in the panel of experts who are cooking the next choice. It will be an easier sell.
Right.
On the
Ram, last word to you, because the other big story that was overnight and that is part of this big geopolitical chess game is the Prime Minister of India hugging Putin in Moscow while Russian missiles were going into a children's hospital in Kiev. This is a really strange look for what is supposedly a Western ally in this particular moment when they're trying to isolate Putin. Your reading on where is India going the direction of Xi in China and embracing Russia? Your thoughts on what all that looks like?
Well, I think I don't see any major shift in what is going on right now. See, look at it. India has been importing a lot of Russian oil, 40% more of India's imports coming from Russia. Historically, India has had a big relationship with Russia, right from the Soviet times also. And quite a good amount of arms supplies come from Russia still. See, the most important fact, India needs to engage with Russia as a counterbalance against China, given the relations between India and China. So looking at all this, India is playing, a sort of walking the tightrope between Russia as well as the Western ally. But the key remains that India is still a key Western ally in Asia, thanks to the Western nations' relations with China. So if you look in the context of the Western nations versus China, India versus China, India's oil security and India's energy, arms security and history, this is an extension of what has been going on in the past also. Of course, optics are there, the Indian Prime Minister hugging Putin and Indian Prime Minister getting the highest civilian honor yesterday. There are a bit of optics involved in that. But it is in consonance with the strategy that has been followed in the last so many years, which has been reflected in Prime Minister Modi's visit to Russia. I don't see it as any major structural shift in India's strategy. That's my thought about it. But yeah, there's been a lot of opposition to him hugging Putin.
Well, I just wonder, and we don't obviously have time to get into it now. Hurricanes wins the vote in this room. Watch Hurricanes. I suppose that makes sense because if you're on the beach, you got a good view of the Hurricanes coming ashore. But Brent crude oil trading 84.12. You're happy to go on your holidays at 84.12. The average price for the year still sitting firmly on it. Little indications that it's going to move off it unless there's a shock or surprise from someplace. That seems to be the view in the room here. And as we go on our holidays, I have to thank the three great analysts with us here today. Of course, Dr. Carol Nachtley, CEO Crystal Energy, being one of our pillars for the last number of years on the Daily Energy Markets podcast. Nobody better. Ram Narayan, thank you so much for becoming part of this group and bringing your thoughts from Asia regularly. And Dr. Aman Nasri, of course, a colleague and friend here in Dubai. Great to have your insights and participation. No better man and no better group. FGE have been leading the way for 40 years. Happy birthday once again to you and all of your colleagues. Have a great summer, guys. We'll see you back in September and hopefully in Fujairah on October 1st and 2nd. Take care.
Sure.
Thank you.
Thank you.
Bye-bye.
Thank you, Sean. Bye.